period of time in a young person's life. Um, you know, and the choices you make and the decisions you make at that point will have a huge impact on your future. So, to have mentors and fathers and uncles and grandfathers is very, very important. I mean, for myself, I'm the product of I don't want to say a fatherless childhood, but my parents were divorced when I was like, what, 3 years old. But I had the pleasure of having mentors through my grandparents and my uncles. And in our conversation before we went live, I was telling Stef and Drew that I was introduced to insurance products at a very, very young age in Guyana. We've got a lot of large mutual companies in Guyana. And if any Guyanese in the call, they're probably familiar with those companies. So many Guyanese had the protection in place, the asset protections. We had the life insurance policies and the annuities, which you would buy for a young child. And perhaps Andrew can expand on this even more. And then at a certain age, at the age of adulthood, which is 18 or 21, the annuity would mature, and that child would get a lump sum of money, $10, $15, $20,000, which for a lot of young people in the Caribbean and Guyana was a great way to start your life. Either you bought yourself a small home, or you bought a car, or you took a trip, or you went with a study. Because at that point in time, a lot of people left the Caribbean to go to the UK and study. So for us in the Caribbean, insurance is not an unknown conversation for us. And even here in North America, so I'm gonna give you some stats. I like to do a lot of research. I don't like people just making random comments without any empirical data to back what they're saying. And Steph can attest that. When you start giving me information, the first thing I'm gonna ask you, well, what's the numbers to back what you're saying? If you can't give me any numbers to back what you're saying, I tune you out. So surprisingly, Black people in the United States, and there's no information for Canada yet, unfortunately. Canada is very poor at keeping data, especially race data. I love the US because the US keeps their race data, and it's important to understand race data to determine where we're going in our futures, okay? So Black people in America are the highest percentage of those who have life insurance, 56%, and that surprised me. The next highest number of white people at 52%. Hispanics are at 45%. So contrary to this false narrative that Black men don't take care of their families financially and otherwise, it is not true. That's the first thing I want to clear up this morning. Most people who are insured, 66% of all people insured, their primary concern is about protecting their family's financial future. So most people are. The biggest barrier to buying the necessary asset or income protection is most people think it's very expensive. So I'm going to step back for a minute. I know I guess I've heard my voice for a little too long now. And I'm going to let Andrew address the stats I just shared. And he can tell me what he thinks on the numbers and give me his perspective as someone who's been in the industry for more than 15 years, right, Andrew? 15, 20 years? You've been around for a while. We've known each other for a long time.
But don't get the grace of giving it away. But yeah, I've been around the block a little bit.
Okay. So Andrew, let me hear your perspective on these stats, and let me hear what you think about it.
Well, the stats are bang on, and they're pretty much ring true the same here in Canada. The differences are in Canada is that one, we have a much lower population of Blacks compared to the US. Now, when we do go purchase insurance here in Canada, we do go with the mindset of, again, with the end in mind, and that's to make sure that we have just barely enough or enough to make sure that we don't become a hindrance to our next generation or to our kids. It's not with the mindset of really protecting an asset. Yes, it's sold as more. You've heard the term mortgages and buying insurance to make sure that you can pay off the house. But that's pretty much the extent that our people were getting the education from about insurance and why to buy it. There's many, many other reasons to buy life insurance, but the easiest way to break it down is I sit down with a client and I was like, okay, let's start with what we know is guaranteed. And we all know that we're going to pass away guaranteed at some point in life. So the point of having insurance to cover that specific event is necessary, especially depending upon what your goal is and how big your families are. And then we work backwards to, okay, let's look at the what ifs. What if this was to happen too soon? You pass away before you got a chance to accumulate all the assets and do all the things in life that you want to do. There's certain ifs that you want to look at and identify that if these happen in my life, this is going to set back not only myself, but my family as well. So the concept of using insurance to protect assets is a very broad, and it gets very complicated when people try to start from the beginning side of their life and say, okay, what do I have now? What do I need to protect now? Instead of starting at the tail end of saying, let's work back to what we know is going to happen and what your situation is now. And let's have a real conversation about what's important for you to protect, to pass on to the next generation. Now, as a father myself, I have 2 daughters. So me personally, I want to make sure that whatever properties I have, my own property and either the 2 rentals that I want to get for them, I want to make sure that that gets passed down to them efficiently. And the other guarantee in life is taxes. So most people don't really understand how the taxes affect your whole wealth picture when you pass away. And insurance is probably the only product that I know of that from a dollar perspective is the most efficient way to protect both of those guaranteed situation in taxes.
Thank you. You said starting at the end and working back.
Yeah.
How does somebody do that if they don't even know where they are right now? Like, I mean, most younger people are just trying to find a way, trying to navigate life. You're 25 years old, you're 30 years old, you're newly married, you probably have a young child, 2 years old. Your focus is, okay, let me get through today. How can I think 40 years into the future or even 30 years into the future? Like, what is the process to make someone think that far ahead when they're barely trying to survive the current moment?
And, you know, I thought the same way, Ray, but it actually is the opposite of when you can take somebody to project and dream. It's very easy for us to do that because we're all dreamers anyways. We all wake up and we all dream of what we're going to accomplish that day. We all dream of where we want to be and who we want to become. So it's not as hard as you think it may be to take somebody and actually guide them to start thinking about, okay, picture yourself 20 years, 30 years, or when you stop working, what does your life want to be like? And it does help when you have an advisor sitting there with you to pinpoint, okay, you're not the first person to go through this life cycle. We have data. We have seen people accomplish these things at these stages in life before, and these are the risks. So it's nothing like it's not something that we're just making up. So when you can pinpoint, hey, when you are 60 to 70, this is what you're going to go through. When you're 40 to 50, this is what most likely you're going to go through. And if you can show them a brief list, most likely there's going to be things on there that they want to do themselves. So when you're that young, or if you're in your 20s or your 30s, or you're building a young family, and somebody can come in and say, hey, you're doing good. Right now, you're in your income earning years. You have your young family. You're probably focused on making as much money as you can to maintain your household. You want to have a little savings. You want to travel, so on and so forth. All these things are typical of what human beings want to do. And then when you can have advisor come in and say your next 10 years now is going to have a similar situation where this is where you're going to be heading into. And now the purpose of why you want to protect these assets and pinpoint them, the features and the types that they should be looking at is very, very helpful.
It all comes back to data. That's how we started the conversation. If you have the data to show the potential client, then it allows them to better make a decision. So let me ask you a question. As the youngest person on the call, and I know you're not celebrating Father's Day this Sunday with us. Well, you celebrate as a son, not as a father. Let me correct that. What is your perspective on insurance and asset protection and all that you've talked about so far?
As a young person, I'm 32 years old and soon to be married. So just kind of paint the picture. I don't have kids, but that being said, I still envision that, once I have assets, a home, rentals, I want to protect those assets and also transfer that to my children. So back to what Andrew's saying with the 25-year-old, it's you don't have to start later in life. And what I notice in my observation with our clients, they start later in life to have this conversation. And there's a lot of roadblocks when you start later in life financially. Um, Health could be number one. What we start seeing is marital breakdowns. Um, they call it gray divorce, and so forth. And it's best to start it while you're young, building the family, having these aspirations to build your asset pool. And that right there will eliminate any kind of, I guess, procrastination of like getting insurance policies or coverage, sorry, in the latter years of your life. And that's the more the observation I've seen with the people I meet who are 65 and up. That's where their mindset is. It's more of an ageism. There's a lot of that. Like I'm 65. This is what my life is. I don't plan on making any changes towards it. And of course, my first initial reaction, that's, very disappointing. But also as a person that's a mortgage agent supposed to advise people what to do, I have to put that hat on and show them the roadmap where what Andrew does, insurance coverage, or on the mortgage side where you protect your asset on the real estate. And that kind of helps them have a clearer picture of this can save them money in the long term and slightly kind of eliminate that mindset of where they're too old to be making any changes in their financial protection plan. And that's my comments behind that conversation.
Yeah, but I want to expand on what you just said, Steph. So what I've seen when I was active, and I'm going to go back even further when I was actually an active life insurance professional. This is back in the 90s. I found that younger people had this sense of immortality, that they were never going to die. Um, and they had no interest in paying $100 a month for an insurance policy. And the younger you are, the less expensive that protection is, whether it's protecting your income through some sort of disability insurance if you get ill, or job loss insurance, and the life insurance protect the larger assets. Is that experience one that you see today as a more professional, where younger clients, and I'm talking between the age of, let's say, 25 to 40, are less inclined, or let's say 25 to 35. So that's the age when most people, are usually at their best health. By the time you're 40, most people start having some sort of ailments. Do you see that as a pushback when you recommend the asset protection, whether it's a principal residence or an investment property that they're purchasing or they're financing? Sorry.
That's a great question. I find there's not pushback on the immortality side. It's more affordability. I think a lot of millennials, because there are millennials at 25 and 40, are strapped for cash. They don't have that extra $100 to supplement into an insurance coverage product. So they're more inclined not to take that coverage because they can't afford it, bottom line. And which in that case, I find that you have to look at your whole spending habits holistically at this point, where you might be spending money on streaming. You don't need, 4 streaming accounts. I mean, they just need one. And last time I checked, that can go up to, you know, $13, $14 for Netflix. So I think it's more of a spending habit that millennials have. We tend to, you know, spend that on restaurants and fine dining and stuff like, and certain attractions, especially if you live in the downtown core. Before you walk down that door, you see the cash register is going. You're always spending cash. So I think it's more of a, for us as a mindset to shift into looking at, you know, yes, you're 25 now, but once you hit 40, you know, your lifestyle does change. And when you hit 50, your lifestyle does change. You're not going to be 25 forever. Mentally, yes, but physically, you're going to face those changes. To that question, it's more affordability that's an issue.
And it's interesting you say that, Steph, because in the stats I was reviewing this morning, the Gen Zs and the millennials, the younger population, they are the ones who are least inclined to be interested in owning any kind of asset protection vis-a-vis life insurance. And 4 in 10 are interested in having life insurance. But more importantly, right, it was women who were least interested. But when it comes to, but for men, it was 4 to 10 of the men who would research the insurance products and have more knowledge of the product. When it came to women, it was around 20%. And my experience in Toronto as a financial professional was the opposite, because most of my clients were female. Most of them earned pretty good salaries. Most had pretty good professions, and most of them were striving to home ownership. A lot of them were divorced or single mothers, or not single mothers, had children that they were raising themselves. I mean, there was also a father involved. So I don't like the single mother analogy, because it's very inaccurate in many cases. But I found in my experience that most of those women were taking care of themselves and their families. So, Andrew, as somebody who's out there meeting people regularly, what is your perspective? What experiences can you share in terms of that statistic? And that 2 in 10 women are financially savvy compared to 4 to 5 men out of 10.
Well, you brought up a great question. And I just want to address some of the things that Stefan said as well, in regards to the affordability and the mindset of value. So with my client base, I work with anywhere between, you know, young 22s to all up to 50s and 55s. So speaking directly with dealing with the younger generations, I found that there's pretty much 2 or 3 subsets. Ones that are living at home and have the ability to focus just on themselves without the burdens of debt and having to pay for their own living experiences and things of that nature. And then you have the young mothers who are pretty much having to take care of kids at their young age, that they probably moved out, and they have responsibility, real adult responsibilities. And in both situations, I found that the money actually is there. It's just that their priorities are different. I.e., I just sat down with a client just the other day. She's 24 years old, lives at her home with both her parents, just finishing up school. And oddly enough, her main worry was that if she was to pass away, because she helps out in the house, that she wants to make sure that her parents didn't have to worry about having to pay the mortgage. She wanted to make sure that if she would able to basically gift them enough money to make sure that they were financially set. And when we looked at her budget and her spending habits, you know, Stefan alluded that she was spending a lot of money on eating out. She was spending a lot of money on the streaming services. She only had her own car payment to worry about. So, but she was still working, and she was bringing in about, you know, maybe $2,500 to $3,000 a month. So the money was there. It was just that she couldn't prioritize her saving habits and where she wanted her money to go. Now, in direct response to the insurance need, when we were looking at insurance, yes, they do not care about insurance about when they die. But if you can show them the plan that not only shows them, hey, your money is not just going to waste and be there when you die. This money is going to sit there for you to use while you're living, have access to, use to go on your trips, use to buy your car, use for your retirement savings, use for those milestones. Then they don't feel like the money is so much of a waste. So when you think of just a basic term insurance, yeah, okay, this will be there by $500,000 terms, going to cost you 25, 30 bucks a month. They don't really get excited about that. But when you can show them, hey, if you're willing to put $100, $150 away per month, this is going to be a secured investment that not only will be there for your whole life, but grows tax-free for you. And at the end of the day, does provide you that death benefit if you wanted it to go to your parents or your significant other or whatever, your children, if you have children at that point. But if you show them the value of a plan that's not just for death, then their mindset changes very, very quickly. And because they're young, and if you tell them, hey, you pay this for 20 years, after that, you don't have to pay another red cent. You're done. Just like paying off your house. Then they say, okay, so by the time I'm 40, 45, I'm done. I don't have to pay anymore. And this will grow with me for the rest of my life. Then they get it really, really fast.
So therefore, it's what we call a value proposition.
Yeah.
If there's no value proposition, there's no interest. They see no value in what you provided. They have no assets yet. They don't own too much. They're still at home in many cases, or they're renting an apartment or a condominium. So they're just living in the moment. You mentioned the dining and the streaming, Stefan and Andrew. That's really interesting. I think the other thing too is that a lot of the Gen Zs are getting married later and having children later. There are two segments to that population. There are those who don't have post-secondary education, and then there are those who do. And what I have noticed, I have no data on this. This is now pure presumption on my part. But what I've noticed is that younger people who are university educated, they are more focused on their careers and professions than starting families. So if you have women finishing school at 20, 23, 24, they go on to a master's, they're in their late 20s. They start their career. Some may travel, find jobs across the world. They may be parts of the Middle East, parts of China. And I've seen a lot of my clients' children do this. And I mean, Stefan has met quite a few of those people. We got a lot of young women and men in their early 30s who are not married and they're childless. Would that be one of the reasons why they are also less inclined to think about asset protection when they don't know where they're going to be living or working 6 months from now? Would you think that that's the case too, Andrew?
Yeah, that definitely plays a lot into it. But I think the bigger picture is what kind of conversations they're having at home. A lot of the younger clients that come across are because they were referred from their direct parent or relative or somebody older that says, hey, this is a conversation you need to have or start thinking about. So yes, I think it still takes somebody to point it out to them, because the biggest reason why life insurance is not sold is because somebody hasn't offered it or asked them if they had it. So that whole 52%, it's because a big picture of that is because nobody has actually asked that person if they have life insurance, or nobody has actually told that person they should have life insurance. So with that age group of what you just brought up, part of that is true, but I think the bigger question is what kind of conversations they're having at home.
So now, this is the Father's Day edition, right? Is the absence of fathers or the lack of relationship with fathers in some cases, do you find that to have any impact on the young people who come to you, have that conversation? And perhaps, Stefan, you can speak to it also, because you are my son, and you can probably tell the audience what my presence as a father has done to impact the financial decisions you made in your life and how you view life as a young adult. But I'll let Andrew go first.
I wish I could sit here and say, as a father, it's important to me. And obviously I have the advantage of being in the industry and knowing a lot more than the typical man out there. But it's unfortunate that most men are not having these conversations with their kids. They're not having these money conversations or trying to progress them or trying to at least have them avoid the same issues and mistakes they made. Mostly it's women that are having these conversations with the children, that are trying to propel them to make sure that they have some financial education, some financial assets, and some financial protection in place. It's not the fathers that are doing it, unfortunately, because when I sit down with a male and talk about, things of these natures, if they're a father themselves, then the main thing is just making sure that their money is right and that some of it will go to the kids, but they're not really pushing their children to have these conversations as well, unfortunately.
So, Stefan, as a son, what was your experience?
Yeah, again, my experience is very different than any other average, young Black male, unless you had a father in the industry, in the financial industry. For me, I was able to avoid a lot of common mistakes, being around my dad, and we have very candid conversations very regularly, transparent conversations where that's a very taboo kind of conversations most Black fathers don't have with their children. We probably all heard like, that's none of your business. This is grown folks' business. And it is their business because it's their future, right? And you wanted them to prevent the same mistakes, or not even mistakes, the same, you want them to also be aware of what they need to do to protect themselves financially, because it's not taught in schools. We all know that. But what we're discussing right now, insurance, mortgages, that's not a school curriculum in high school, middle school, elementary school. So it's entirely up to yourself or your parents to share this information with you. And we're talking about certain generations, Gen Zs and millennials. We have access to these things now. You just type in mortgages and you get a whole spread of information, or insurance. But again, to really dissect what you're reading, you need to speak to a professional. So again, with Gen Zs and millennials, we believe that what we read is it's the hardcore facts, but that's necessarily not the case. A lot of stuff is opinion based. And some of them are kind of agenda wise, aligned to certain government. So you have to speak to professionals that don't have those swayed opinions. And going back to myself, we had this conversation earlier, myself, my dad, and Andrew. We both had the same credit card issue. We both got a credit card early in our lives. We maxed it out. No one explained to us how a credit card works, interest rate, payment policy, anything. Just hand you a credit card and you max it out within 2 weeks. And next, you're in, credit card trouble. You got the creditors calling you to pay you back, and you're in college and you're working minimum wage. So we all want to prevent those situations from happening. And popular belief or not, it's very common among us, those things, those type of situations where we find ourselves, it reoccurs every generation. And then now the debt is increasing even more, actually, as generations go by, because inflation, cost of things are going up. So it's not like our parents' generation where, a candy bar was 25 cents. That candy bar now is like $2. So you got to be mindful of how you're spending, prioritizing what's important to you. As Andrew said earlier, he has a lot of truth behind that. Once you don't have any type of obligations in life, you may not be paying your parents any type of rent, to help them out. You're just living it with your parents. You have a car. You could do whatever you want. You could travel the next day and go to Peru and for a month. So getting insurance protection is not in your agenda. It's not even a thought to begin with. And we have to shift that mindset where it has to be agenda, it has to be a priority for us to prevent any type of financial struggles.
Well, we got about 6 minutes left, but I didn't see any questions so far from the audience. So either we give them all the information they need, or they're just too engrossed in the conversation with us to type any questions. So, but I want to touch on something that's very common today. And that's the GoFundMe funeral, right? It's a last segment of our population. I mean, we know what the stats are, right? More than half the Black men out there have some sort of life insurance, some sort of protection to take care of their families. But then there's almost half of them who don't, right? And most of them will have children, have a spouse, a partner, have a home, probably has a mortgage in it, probably have a car loan or a car lease. So what is the opinion, the popular or unpopular opinion from you two gentlemen about people passing away and then doing a GoFundMe? As an insurance advisor, Andrew, what is your opinion on that? I've got mine.
It's probably it's probably an unpopular opinion, but I don't support it. Simply for the simple fact, if you're an adult, if it's a child that passes away and, it's kind of unexpected and you know what, it causes financial hardship in your family, that's a totally different story. But if this is you as an adult who's lived enough life to have the opportunity and know the value of why you want to protect the people that you are leaving behind, and you don't personally have life insurance, and unless I know your backstory of that you couldn't get it, you couldn't qualify for it, you had health concerns and just couldn't get it, and I know all those details, for me, using a GoFundMe is not an excuse or a reason to even use that to bury you. It's unfortunate it happens way too often, and I understand why the situation comes up, but it's still not a valid enough reason for me to say that you shouldn't have that protection in place. We all know it's a guarantee we're all going to die. So for me, it's kind of ridiculous of why you don't have it. If you know this is going to happen, maybe you've gone through your own family member, you've seen what it possibly happens to them. I think it's just, unfortunately, a little bit of laziness and not enough caring about who you say you care about.
Thanks. You shared a very candid opinion there, Andrew. What is your take on it, Stefan? Like, how do you see the whole GoFundMe phenomenon where people are asking you to bury their loved ones by putting money into a GoFundMe?
I look at it as a case by case. So when I hear a GoFundMe kind of situation, it's normally someone that's low income. They just immigrated here. And the case where someone was murdered or killed. That right there, if those things kind of are the details behind it, I can understand someone doing a GoFundMe. But as a person that you own a home, you have a job, you have family members, I think it's your responsibility to have some type of coverage for your loved ones, and not have your hand out to the general public to give you money. I find that a little peculiar, and even sometimes a little shady. I don't know, because again, you don't even know where you're giving this money to directly. So you have to take that in a grain of salt when you participate in a GoFundMe, but I'm not a big fan or advocate behind people using GoFundMe to bury any loved one. And it's becoming a very popular occurrence. And I notice it typically ticks with a person that just recently immigrated here, and they live in a certain neighborhood. What I've read, I'm pretty sure there's other cases, but what I've read is normally kind of in this circumference of an individual. And most times it's someone who was killed in an act of violence.
That's interesting. I mean, it's, I always tell people that I can change my opinion when I get new information and a new perspective that I can respect. And what Stefan just shared has changed my opinion. I never thought about the new immigrant coming to the country who doesn't have a whole lot, or the person who got killed in an act of violence where they were like it was random. They were not they're not involved in the line of crime. They're living their lives right, but I never thought of it that way. But you're correct. I mean, if you just migrated to Canada, the US, you're coming from a relatively poor country with your family, usually with very little, your primary concern at the time is to feed, house, and clothe yourself. So the life insurance, even though you might know you need it, might not be something that you can afford right now with your minimum wage job at the moment. And we've seen many cases, looking in Toronto, on the construction sites, where construction workers get injured or die in the construction. I think there was one a couple of years ago, a guy fell off a crane or something in Toronto.
Yeah, I heard that.
And sometimes those workers don't have Canadian residency. Now, I'm not too sure the residency requirements are when it comes to life insurance, both in the US and in America, so I'm not going to make any assumption. I'm not going to put Andrew on the spot to answer that question. So that's more of an immigration question rather than an actual financial planning question.
They can get coverage. They can get
But
coverage, but the affordability and again the presentation or the offering of it, or even them knowing that they can get it, is where it is. But immigrants can get coverage.
Even without a permanent residency status in Canada.
Yeah.
So they've got a work permit. They're here as a student. They can still buy it. That's very, very good. That's very, very good to know. So thank you for sharing that. But this has been a really good conversation, and again, when we spoke about what we're going to talk about this Wednesday, because we do this once a month, every Wednesday, the morning money comes with Stef and Drew. We're touching a lot of subjects, insurance products, but not a lot of subjects, touching basically two subjects. Insurance products, because Andrew's a certified life underwriter, and mortgage products, mainly the reverse mortgage, because Stefan is a mortgage professional. And then myself, I've had the experience in both of those arenas, both as an insurance advisor and as a mortgage professional. So I bring a perspective that allows them to sort of expand their knowledge base with us. But this has been a very, very interesting. I see there's two comments in the chat. Yeah, Trish said the same thing. Great perspective. She didn't think of it that way. And that's what I was saying. When you get new information, as an intelligent person, somebody who is a critical thinker, you are supposed to change your opinion and change your perspective with that information. So again, thanks for sharing that stuff. But yeah, so this once a month conversation is a very casual conversation where we want to inform and educate with participation our audience on things money. It's a casual money conversation. We do the 10-15 once a month. By 10-15, you've checked your emails, you've gotten to the office, gone to your desk, started your day. And we're going to interrupt you for 45 minutes, just have a nice free-flowing conversation. We want your participation, and that's what we did today. So up on the screen, we've got the contact numbers for both Andrew and Stefan. We've got their emails, websites, and phone numbers. These gentlemen are very, very knowledgeable. So I hope you got something from the conversation today. And if you did, and you yourself have got all the necessary coverage you need, tell a father, this is Father's Day weekend, to let him sit down with his insurance advisor, his more professional, review their current status, financial status, and they may or may not need any coverage. But we need to make sure that our men, our fathers, our brothers, and our sons get the information they need to make the right decisions. But that's the only way we're going to grow as a community. and create financial strength. I always tell people one of my pet peeves is the fact that, you know, my two sons never really were able to find jobs when they were in high school. Well, Stefan was fortunate enough to find one. Darren wasn't, because not many Black people have the capacity to employ anybody. And the more wealth we create in our community, the more that situation will go away. So for people on the call who have children, whether they're daughters or sons, the fastest way to create wealth is through asset protection. And the fastest way to do that is by having the right insurance coverage in place, whether it's life insurance or some sort of income. I know we didn't touch income protection a whole lot, because we didn't want to get into an insurance conversation. We just wanted to have a general conversation on how to protect the asset. Now we're a bit over. We don't want to impose anybody's time, you know. But if you got any last words, Andrew and Stefan, if you can share with the audience, you know, and then we can wrap it up.
I think those are great closing closing statements, Ray. And I just want to thank everybody for coming. And like Ray just said, you know, the quickest way to instantly increase your estate is life insurance. Dollars paid today for the future instantly create an estate for you. If you don't have assets, if you don't have the savings, you can pass on with life insurance.
Stefan?
Yeah, just my closing remarks. Thank you everybody for attending our conversation today. I hope it was very insightful for everybody. And if you guys like to hear our previous conversations or just as insightful, reach out to me or Andrew or my dad. We can send you a link to those conversations that we had.
All right, thank you very much. See you guys next month, same time, 10:15 in the morning. And if you want to see all conversations, you can visit